Hi, David.
Hi, David. Are we here launching David Coin?
I think we are. I think we should. Well, there's 10,000 people here, 10,000 people at TOKEN2049 Singapore. This is the biggest and probably most important digital asset conference anywhere in the world. And the energy's palpable. You know, I've got to say that last panel was, or sorry, talk was a little bit depressing talking about regulation. I've got to ask you, David, you know, that suit looks very mighty tailored to me. Are you actually from traditional finance?
Yep, that's where I spent 35 years of my life in traditional finance and only 7 in crypto. So LMAX Group operates 5 exchanges. Most of them are in traditional assets in foreign exchange. And the latest one we launched was LMAX Digital. It's now 6 years old. And we like to think we are the largest institutional crypto exchange out there.
That's a very big deal. And you know, 6 years in crypto may as well be 60 years in any other industry. We've learned a lot of lessons here. This is your second, I'm going to call it bear market.
Yeah.
So a sincere question for an organization that has a huge player in the FX space with offices in many countries around the world, from Tokyo to New York and everything in between. Why are you still in crypto, sincerely?
Sincerely, because it's the future, right? So in a way, we're fortunate. We launched in 2018 right in to the bear market. So we withstood that, but notwithstanding that, it was still the fastest growing exchange we ever built. So the reality is today, crypto is small, but don't let it worry you. It's going to replace, it's going to be fundamental to the whole of traditional capital markets going forward. There are $200 trillion of assets under management today. The total value of crypto is $1 trillion. So it's 0.5% of the whole market. The reality is that whole market will be powered by blockchain. You will have more frictionless access to all assets, and you're going to have true democratization of trading worldwide within the next decade. So it's not really what happens in 2023, it's what the world is going to be in 2030.
Well, so let's talk about some of the kind of things maybe blocking it. Again, you come from Wall Street, you come from the city, so to speak, right? Regulation's a very big deal there.
Sure.
Why should this audience here in Singapore care about regulators in the UK, the United States, and some of these other places with established financial centers?
So look, if all you care about is the assets you trade today, the value of Bitcoin, the value of Ethereum today, next week, next month, you don't need to care. But if you want to access every asset on the planet, you need that weight of capital that comes from traditional finance. You need the biggest asset managers in the world entering the space. Why? They drive innovation in product, they drive liquidity, and guess what? They drive the price down.
So why does liquidity matter? Because, I mean, I would think that these very large players, they can come in and drive billions and billions of dollars of daily volume. They certainly do in FX, again, something that you're a huge player in, and the volumes there are stratospheric.
Yeah. So look, efficient markets are liquid markets. That's why foreign exchange is the most liquid market in the world. We trade $30 billion of foreign exchange a day, and to be clear...
A day.
To be clear, the cost of trading that is, I can't even explain to you, it's a 40th of a basis point. At the moment, people are still charging 10s, 20s, 30s basis points to trade crypto. In some cases, 1%.
Right.
So that liquidity creates market efficiency.
Especially to the retail market, you're seeing literally 100, you know.
Well, it's too expensive. I mean,
yes.
you can be right on your crypto calls and wrong just by your cost of trading, right? So you can lose all your gains just through the cost of trading. So that's okay, this is a nascent market, but institutionalization of a market drives efficiency, drives liquidity, drives pricing down. When you and I entered the market, David, we were still paying to trade equities. Now you trade them for free.
Yeah.
Right? But you want to buy the tokenized version today, you're probably paying 30 to 50 basis points. That's too expensive. So this is why we need that weight of money, and it's okay. You can still be self-custodial. You don't have to, I believe totally in the future of the original white paper that says we want to be decentralized, we want to be anonymous, we want to be trustless.
And so it's not incompatible.
Absolutely not.
With traditional finance.
Absolutely not. In fact, you know, that's one of the things we're building out at LMAX now. Look, we're centralized, so you can all hate me if you like, but we provide decentralized access to centralized exchanges. Decentralized access to the deepest liquidity, the most efficient markets in the world. If you want to be your own bank, you can be your own bank. Not your keys, not your coins. That's fine with us. But some people don't want to be their own bank.
Yeah, pension funds can't exactly do that, can they?
They cannot today, but maybe they will in future. In fact, I think that's part of the democratization. The problem they have is the inefficiency in their collateral. And it's the same for a retail as well. If you think about it, how are you utilizing your capital today? Some of it's in your house. Some of it's in your stock portfolio. Some of it's in crypto. You have to fund all those. Much better you have it in one place, and depending what's moving that day, that given day, whether it be 3 a.m. on a Sunday, you can allocate your own capital to it. It's the same for a pension fund. It's the same for a bank today. They spend most of the day moving their capital around and actually being really inefficient about it. So they know with 24/7 markets, with efficient, fungible capital.
It has to be the future.
Correct. They can trade 50% more.
Okay, so let's talk a little bit about institutional capital markets meets crypto. And of course, 3 letters come to mind, ETF.
Yep.
So are we going to see a US spot ETF anytime soon?
100% yes. I totally expect that to be approved in the next 6 months.
Okay.
I'll come back to this stage and I will eat my hat if that's not the case.
Okay, guys, we heard it here. Please record that. Put it on the internet so we can come back to it. Okay, so let's say it does happen. What does that mean for me, a person with crypto in my wallet, or someone who works maybe at a crypto company?
So 2 things. 1, if you're long today, you're right, stay long. Because, look, it's supply and demand. Very simply.
This is a bullish CEO over here, folks.
Very simply, look, if one of the issuers of the ETF or one of the applicants is the biggest asset manager in the world. They control $11 trillion. That's 11 times the total value of crypto, right? If they allocate just 5% of their assets, or their customers want to allocate 5% of their assets to crypto.
Which does not sound unreasonable.
Absolutely is not unreasonable. And again, I'll make a prediction there. Within 3 years, 5% of all asset managers, money managed by asset managers, will be allocated to crypto.
And right now, they're not putting anything in there. It's essentially impossible. If I'm a wealth manager, I can't advise this in most places.
They just cannot because, look, they have to deal, they're heavily regulated, they have to deal, and they should be, by the way, because they manage your money. They manage our money, right? So they simply cannot access it. ETFs are the easiest way to access all products globally today. So all of a sudden, that $100 trillion that managed by asset managers will be able to be allocated to crypto. Today, it's 0. So suddenly, why does it matter to you? You happen to understand wallets, understand the markets. You can trade for yourself. Not everyone can. So they're going to want to access it via their asset managers, via the ETF. But the flip side of that is, so suddenly you have 7 billion people able to trade Bitcoin legitimately. That's a good thing.
Yeah, so right now they technically
cannot,
but they can't functionally.
Correct.
If you don't know how to use a Chrome extension MetaMask, how are you going to start, essentially load up to a DEX?
Correct. So, and it's fine. The two can exist. So you have people who say, look, I don't understand wallets, right? I don't understand how to settle. I actually don't understand the spot market. I don't understand how to store it. I'm going to buy the ETF. Guess what? You do. You do.
And we see this in equities, right? I mean,
correct.
Most people aren't actually day trading equities. They're buying it in some sort of fund.
Yeah.
So this functionally should work.
It will work.
Okay.
I mean, look, it's going to be there's 2 pumps going to happen in crypto. The first one is short term. That's the ETF. You're going to see a minor pump of the crypto market. But the biggest thing is Bitcoin and Ethereum are proof of concept for the coming tokenization of all assets. When that happens, I don't know how many zeros you want to add to your crypto portfolio, but it's just the reality that you will have been first, because when you buy a tokenized Apple share, when you buy a tokenized US Treasury, the forerunner for that will have been Bitcoin and then Ethereum.
And it likely is going to run on some sort of permissionless rail, a layer 1, for example.
Yeah.
Just because permissionless technology seems to win. So let me ask you this. When do you think you're going to start seeing more real-world assets that are tokenized? Do you think this is something that's going to happen next year, 2 years, 5 years, 10 years?
It's happening, right?
It's happening.
But at the moment, they're proof of concepts. So what you see in the institutions is, some of the largest banks are already doing things for balance sheet efficiency, and they're trading tokenized assets between themselves. They are innovating products, and they understand.
Like the famous JPM coin, for example.
Correct, right? And in fact, what is the JP Morgan coin? What is Onyx? Well, it's just efficient collateral, the same as USDC, the same as Bitcoin, except not everyone accepts Bitcoin. More people might accept a JP Morgan coin, right? Which is good, because then all of a sudden, crypto pervades traditional assets. Your bank, your broker will accept that as credit against your whole portfolio, not just crypto. So look, I'm agnostic to which stablecoin wins, which collateral wins. If it was a decentralized crypto dollar, that's okay. If it's a JP Morgan coin, that's okay. If it's Bitcoin, that's also okay. But what all this really means is we go back to where we started, which is we have less friction in the market and fully accessible capital markets for everyone.
So what is LMAX doing to prepare for these eventualities? What I heard here, I don't use the P word, but 2 different mechanisms, or I should say, or vehicles for price and volume increase in the future. The first one you mentioned is ETF approval. The second one is more and more real-world asset tokenization. So what is LMAX doing to prepare for both of these eventualities?
So the first bit is education, right? So we have about 200 brokers as customers, all of the world's largest banks. So it's education of the power of
So you're
crypto.
doing this today, and these are brokers from real institutions.
I've been doing it for 5 years. So we have brokers now. It used to be, if I go back to 2018, they sent me dollars. They traded stock indices, they traded currencies, they traded gold and oil on leverage. Now they're saying, we don't have dollars. Why? Because our customers are trading a lot of crypto. Can we send you Bitcoin? The answer is yes.
Wow.
So we make that fungible. So we're able to straddle the divide between traditional finance and crypto. But more importantly, at LMAX today, when we launched LMAX Digital, we launched 5 products: Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and XRP. Now we're able to list and store all ERC20 tokens. That's the starting point. And then Solana. And then we're going to move into all the other chains. Why? Because I don't know which chain they're going to choose. It's a bit like, I never know if gold's going up or oil's going up or what you want to trade tomorrow. So we need to be prepared for everything. And all of those assets we're talking about may list on one chain or other. So that's what we're preparing, because we prepare as if true decentralization, true self-custodial access starts tomorrow. Not in 5 years, not in 10 years. We must be ready. Otherwise, like every other incumbent in TradFi, we will lose our space. We don't want to be blockbusters. We want to be Netflix.
So it turns out, what I'm hearing here is that TradFi is not the enemy. Some of them seem to be adapting to the times.
They all are, because, listen, Mr. Diamond said it himself. If they don't adapt to what's going to happen...
The mortal enemy of crypto, supposedly.
Not at all, though, right? They have I think that bank has the biggest digital assets division in the world. The buzzword, and I think this is okay, by the way, the buzzword in banks today is blockchain, not crypto. But you all know, crypto is based on the blockchain. To have an efficient blockchain of anything, you need to have something of value you can move along those blockchains. So they are preparing because they know it's inevitable. Right? The tokenization, the digitization of capital markets is inevitable. It's as inevitable as .com as the internet was 20 years ago.
So, okay, we've got an ETF coming up, we've got real-world tokenization, and I imagine you're also spending time educating people on that today?
Sure. I mean, that's what we do in our lives, right? We're constantly educating and we're constantly evolving, because this is, people say it's fast-moving, but actually, you know what? Bitcoin's kind of old. It's been around for 15 years, right? So we've got to get moving. If you're a true evangelist, you've got to try and find a way to be pragmatic, to educate traditional finance. Otherwise, we're always going to be a small asset class. I've made the case. This asset class can be every asset class, but we must spend time to find a way to integrate with traditional finance, and part of that is just education. When we educate the market, when everyone understands the market the way you do, the way the audience does, then it's going to be good for everyone.
let's talk about global expansion. It is a very big world out there. We're sitting here in Singapore, but of course, you guys have offices in London, New York, Tokyo, et cetera. Where's next for LMAX?
We're global today, so we have customers in 120 countries. That's the beauty of my learning curve, right? What we learned at LMAX. We operate in foreign exchange. It's a 24/5, not 24/7 market, and it trades globally. Eurodollar is the most fungible product in the world, and it trades in Auckland, it trades in Taipei, it trades in London and New York, obviously. So whenever you launch any product today, you have to think global. It's not about languages, because ultimately, if you're talking about an Apple stock, or you're talking about a US dollar, or if you're talking about Bitcoin, that is the language, the only language you need to understand. So when you launch product today, you don't need to think about China and India, or the United Kingdom or the United States. You must think globally. So what we will do as a TradFi regulated organization is follow where the best regulatory frameworks are. That's what we've done historically. That's what we will continue to do. But our customers will be global.
Well, speaking of your customers, they all have one question, something that they're thinking about right here at this conference. They're thinking, at the end of 2023, at the end of 2024, let's talk about 24. What's the Bitcoin price got to be? I've got to ask you, David, you've been a man of making big, bold predictions. What's your prediction?
I'd be very surprised if in the next 18 months, Bitcoin doesn't trade through 100,000.
100,000 US?
Yeah.
Okay. Folks, post that on the internet as well, and let's check back here a year from today. David, thank you so much for joining us. It's been a pleasure.
It's been fun. Thanks, David.
Got it.
Cheers. All the best.